Hello, everybody, and welcome back. Today, my guest is Shibani Kurian, Head of Equity Research and Senior Portfolio Manager at Kotak Asset Management. Today, we want to discuss latest opportunities in the Indian stock market. Welcome, Shibani.
Hi, thank you so much for having me on my show. Pleasure to be here.
Shibani, Indian equities delivered some of the strongest returns in the Asian region in 2021. What drove the upswing?
Yes, you're right. India in the calendar year 2021 was possibly one of the best performing markets in the emerging market basket. And in fact, if you look at India's weight in the MSCI Emerging Market Index, it's at an all-time high. There were three key factors that drove this outperformance. The first was in terms of sentiment and liquidity. Globally, as you know, central bankers around the world had followed an expansionary monetary policy. And apart from that, we saw significant increase in domestic retail participation in equity markets in India. The second key factor was improvement in corporate earnings. And in fact, FY20 saw the bottoming out of profit to GDP ratio. And FY21, though was a COVID year, saw improvement in corporate profitability where India is concerned. Now, this was on the back of four key factors. One was cost cutting, which most corporates undertook. Second was lower interest rates. And the third was balance sheet deleveraging, which resulted in reduction in debt and improvement in cash flow. The third aspect which drove the entire outperformance was change in government policy, which has shifted clearly towards investment-led GDP growth. And therefore, investments in infrastructure, which results in job creation leading to higher growth, is the policy that the government is now undertaking. So it's been a mix of all these three factors, which has resulted in Indian markets delivering the performance that we saw in the last calendar year.
Hi there, just a 2-second break. Before we continue with the video, just make sure to subscribe to our channel now to not miss out any updates. Thank you very much and enjoy the video now. What sectors and industries did particularly well in the last year?
I think the last year was characterized by a pretty different shift in terms of the sectors and segments that contributed to the up move. So if you looked at last year, the broader markets participated significantly in the rally, which meant that the mid caps and the small caps, these companies actually outperformed the large caps. Now, while this is important is that in the previous 2 years, we saw significant polarization of the markets, where only a set of stocks actually contributed to the up move. And therefore, clearly over the last year and a half, we've seen that the market movement has become fairly broad. In terms of sectors, there were three key sectors which contributed to this rally. The first was commodities. Of course, globally, we've seen change in terms of demand-supply dynamics with supply constraints in China because of their shift towards decarbonization ahead of the Winter Olympics. The second was IT or technology as a sector, where we saw faster digital adoption the world over and corporates increasing their technology spends, which benefited Indian IT services companies. And the third was real estate. This was on the back of better affordability, lower interest rates, as well as policy changes which supported the real estate sector. So that's how the markets have really been over the last year.
So especially India's IT sector gained some traction last year. And we could hear a lot about the semiconductor shortage in the world. But what is driving the IT service sector, which India is particularly strong at?
I think one of the key outcomes of COVID on the positive side, if you want to look at positives in this sort of an environment, has been that digital adoption has clearly accelerated. So companies which were undertaking digital transformation because of COVID had to accelerate the digital transformation journey. And therefore, spends across the board towards digital has increased. What we've seen is that even today, most of the CIOs of companies expect that IT spending as a percentage of revenues would increase over the next few years. And this bodes well for Indian IT services as a whole. And therefore, at this point in time, we believe that the revenue growth trajectory that most of the Indian IT services players are seeing because of increased outsourcing, as well as increased digital adoption and moving towards cloud automation and the like, is supporting the kind of earnings growth trajectory that you're also seeing. At this point, what we've also noticed is that the deal pipeline remains fairly healthy. So it's not just a one-year phenomena. Going into the next few years, we expect that the deal flow and the momentum to remain strong even while there are supply side constraints because of accelerating wage pressures and attrition, which could have some bearing in terms of margins. But overall, the revenue momentum across the board for large caps as well as for mid cap IT companies continues to remain strong. And that is what has resulted in the outperformance for IT services over the last year.
So amongst international companies, so there is now this China plus one strategy as a result of recent supply chain disruptions, but also the political issues going on internationally between the US and China. To what extent can India benefit from China plus one?
So the China plus one sentiment, as you described it, has actually been positive and beneficial for India because of the changing global sentiments, geopolitical tensions that are there across the world, especially accentuated because of COVID. What we've seen is that companies around the world want to diversify their supply chain away from China, and that presents a significant opportunity for India. At this point in time, recognizing the opportunity that presents itself, policy focus has also become fairly favorable. Now, this started with the cut in terms of corporate tax rates, which happened in 2019, which has resulted in India becoming a level playing field as far as manufacturing capabilities and companies wanting to set up manufacturing capacities vis-a-vis the rest of the emerging market pack. A policy focus that has also happened in terms of, say, the production linked incentive scheme, which seeks to attract manufacturing into India through capital led incentives, is also aiding this entire China plus one strategy. One key sector that is also benefiting from this China plus one strategy is the chemical space, specifically specialty chemicals, where China has a dominant market share. Indian chemical companies are actually benefiting at this point in time from growing scale and also the reducing competitiveness of China and the global need, as we were discussing, in terms of supply chain diversification. So overall, across sectors, we have seen that India is fairly well placed to capture a share of the global manufacturing pie because of this China plus one strategy that many companies are adopting.
So again, about talking about a semiconductor shortage. So the big players in this area, China, Taiwan, and the US, we haven't heard too much about India, but recently we noticed that India is also trying to build its semiconductor industry. So can you tell us more about that?
Yes, you're right. Semiconductors are the lifeblood of all digital products. Today, India's semiconductor demand stands at almost $24 billion and expected to reach about $100 billion by 2025. So there is a huge need for semiconductors. Now, the problem with India today has been that in terms of the ability for India to manufacture semiconductors, that ability is still not been built up, and therefore most of the demand at this point in time is being met largely through imports. However, what we've also noticed that across the globe, there is no one established country which has autonomy in terms of semiconductor value chain, and therefore India does have the capability to attract some of that value chain. However, building semiconductor capability and manufacturing requires a significant amount of capital investments, and therefore that's what has taken time. Recently, we've seen some of the large companies actually talking about setting up capacities in India, therefore making India more self-sufficient in terms of semiconductor demand and catering to that demand and reducing the import intensity of this product. Government policy also is seeking to provide the required capital in order to aid some of these companies to set up manufacturing capabilities in India. And therefore, the hope is that in the next few years, the import intensity would reduce and India would, to some extent, become self-sufficient where catering to its own semiconductor demand is concerned.
There's currently a lot of uncertainty in financial markets, just to mention inflation rates, eventually risk hikes, the problems with the global supply chains, for example. So what's your outlook for Indian equity for 2022 with this given uncertainty?
So if you look at Indian equities over a slightly longer period of time, not just the next 1 year, we do believe that we are in a structural uptrend because of improving corporate profitability and a improving policy environment, which is supportive of CapEx and overall infrastructure development. In the near term, maybe over the next 1 year, however, we do see that there are certain risks which could lead to some degree of volatility. As you mentioned, right now we are in the midst of a geopolitical turmoil. Interest rates and inflation are on their way up globally, and in India too, we've seen inflation move up. And therefore, near term, there are a few factors which could result in either consolidation of the market or volatility. Also, one of the key factors that has supported market up move, as we were discussing earlier, has been corporate profitability improving. And we've seen that over the last few quarters, there has been actually earnings surprises or earnings upgrades that have been taking place. Now we are seeing that the pace of earnings upgrades is actually slowing down, and therefore market is by and large factoring in some of this robust corporate profitability. Hence, valuations, if you look at it on an absolute basis as well as on a relative basis, are at the upper end of their long-term averages. And therefore, we do believe that this year would be more of bottom-up stock picking. It would not be as broad in terms of market movement as we saw last year. And therefore, this is going to be a stock pickers market. We are focusing on few key themes for the year and going forward. The first aspect that we are looking at is the revival in terms of domestic capex and therefore sectors such as industrials, manufacturing, infrastructure. The second is the banking sector, which we believe that financialization of savings is continuously improving in India. And therefore, private sector banks are very well placed because of market share gains, both on the loans and deposits. The third aspect we had actually already discussed in terms of export opportunity, supply chain shifts away from China. And fourth is the digital adoption that we have seen because of COVID, which we believe will continue going forward as well.
This was Shibani Kurian from Kotak Asset Management. Thank you very much for being with us today and your insights into the Indian equity market.
Thank you so much. Pleasure being here.